Jones is an economist. Been doing it a long time. He spent 27 years with Capstone Title, which is how I met him originally. I've been seeing him speak at title industry events and real estate events for probably close to 20 years. Hails from Colorado originally, but his home is he splits time between Houston, St. John, and Fredericksburg, Texas. So without further ado, I'd like to introduce Ted Jones.
Wow, I'm honored to be here. What a beautiful day too, and it's Austin, Texas. Thank God it's not Cleveland. Guys, for 27 years when I was with Stuart, my first speech every year was in Cleveland. And for the first, literally, from 1997 until 2014, I didn't tell him one good piece of news about Cleveland. It's a true story. And at the end of the 2014, we had about 1,000 people in this room and wireless microphones for questions. And this guy came up, he gave the microphone, and he says, you know, you've trash talked Cleveland since 97 to 2014, and we've had enough. We're tired of it. We're not putting up with it. He said, in fact, you're not getting out of this room unless you tell us one good thing about Cleveland. And so I sat there, and it was a mean crowd because it's Cleveland, and it's January, and it's 17 below outside. And I thought for a second, I said, the good news is in Cleveland, you don't live in Detroit. And the whole crowd went, ugh. Yeah, so gosh, great to be here. Bradley, honored to be here, and it's been neat to know Bradley for over 20 years. So I write a new speech topic every year. Every speech is different. This is probably the most unique new speech I've written in years. And no one will see some of that stuff. I figured it's like flying airplanes. Anyone else fly airplanes in here in the past or ever? Who's ever flown on an airplane? Anybody? Okay. Headwinds, tailwinds, turbulence, but we're getting there. It's not a perfect economy out there yet, but you know, it's a lot better than you think, and you do live in Austin, Texas. King Solomon, in reading Ecclesiastes, he said, there's nothing new beneath the sun. And then we haven't bought a car from Carvana. Anyone in here bought a car from Carvana where you use a big token and it comes out of the machine? Has anyone done that? Okay, you did. Pretty cool. And you think that's innovative, right? That tower and all that kind of stuff? Nothing new under the sun. This is a Nash Auto Company in 1933 in Chicago. Guys, this economy you've seen before, am I correct? You survived it, some of you excelled in it, am I correct? And I think that's what you're going to look at today. Now, that's not my wife. By the way, my precious wife of 51 years is over here. Sherry, stand up for just a second. It's her birthday today. I won't tell you which one, but her birthday. That's not her, but she and I both grew up in Colorado. She's in Uray, Colorado, cattle ranch. I'm from Montrose, a sheep ranch. And we never want to see snow ever again. Feed 5 tons of hay at 30 below zero, and you'll understand that. So I would never do this. You people from Austin, you would. You keep Austin weird. Who wants to do this? Anybody? This is not you wanted it. It's always a woman, Sherry. I want to tell you this. You want to do it, and you come out of the clouds. No. Who else besides me says no way? One lady, but this whole table of ladies are doing this. Guys, I speak every October at Georgia Tech, and by the way, if you want to have a kid or a grandkid that wants to be an engineer there, one of the best engineering schools, don't send them for English. Reserve it at the conference center. Yeah, I love this one. Don't worry about getting older. You're still going to do dumb stuff, only slower. No one's agreeing with that because no one's older than I am in here, I don't think. Guys, talk about creativity. We're going to talk about that a lot today. We're looking for computer engineers who'd like to solve difficult problems. Call us on this number below. Who can figure it out? Anybody? Isn't that a brilliant way to advertise on that? Oh, and this one, please use uploaded logo. Y'all understand what happened, right? Yeah, it didn't happen. And my favorite one, cutting to the chase, gift not included. One person got it over here. I like that. All right, I've been married 51 years. How to understand women, Sherry, I apologize, but I have no idea. Men, do y'all realize I was just honest in front of my wife? Anybody realize it? Ladies, am I correct? Yeah. All right. I'm going to talk to y'all in Austin. And you're different because you're in Austin. Number one, you're one of the main new technology centers in the world. Am I correct? Look what's happening here. It's not happening other places. I'll show you that. Number two, Many of you all believe that by 2030 or 2035 we'll be 100% renewable energy. Pray to God you're not. Because wind and solar are deemed the most unreliable energy sources for technology that's ever existed. Oh, and I want you to look at this graph. This is global primary energy consumption by source. You go from that lighter blue down, that's basically all fossil fuel. And that little tiny bit from that dark blue up, that's everything that you would call green energy. Do y'all understand, after literally pushing this for 3 decades, that's all we got? If we were to go to 100% renewable energy today, number one, we would never be able to build another data center in Texas. How many of y'all knew that? It's unreliable energy. You can't get a loan to build a data center using unreliable energy, period. No one seems to realize this stuff. Oh, and go back up the Midwest, go up to Dakotas, Iowa, Kansas, Nebraska. You're looking at one of the larger solar installations in the country. And sitting over near it is a coal-fired power plant that generates the electricity to melt the snow off the solar collectors and spin the ice off the wind turbines. How many of y'all knew that? North Dakota has a coal-fired plant. They burn 2,000 tons of coal an hour during the middle of the winter to keep their wind turbines ice-free. How green is that? The irony of it. Oh, and subsidies. Oil and gas, natural gas, to put in a megawatt of power generation, we subsidize at 39 cents. Wind is $18.58. We already have a huge federal deficit. In fact, we're going to refinance $36 trillion in total federal debt in the next 36 months. Money that, because we use short-term bonds because of lower interest rates. And that means the federal government, if you're borrowing money to do a big commercial deal, is your biggest competitor in the next 3 years. Do y'all understand that? Because the amount of federal debt we have. I want to talk to you about, again, Austin being literally the new technology center, a part of the world. It's all driven by electricity, right? I want to show you comparative electricity costs, because I guarantee you we're not moving to California for a big AI installation where electricity costs are almost triple. So we're 11.9 cents per kilowatt hour electricity. That's very competitive. Y'all agree with that? So now let's look at where our big wind sites are. Iowa, which burns literally 60 to 64% of electricity, is wind turbine generated. They're 14 cents per kilowatt hour. You want to come to Texas, you want to come to Iowa. And yet they have a lot more wind than we do. Do y'all get this yet? Green energy is very expensive. It's extremely expensive. Throw in there 56 to 70% of South Dakota is wind generated depending on the year and the day. It's 12.8 cents per kilowatt hour. That's 10% more. Kansas, 40 to 50%. Kansas, take a look at it, guys. 13.5 cents per kilowatt hour. Excuse me. Oklahoma, 35 to 40% more. All right, they're about competitive with us. Throw in New Mexico, 37%. Do y'all get it? If we go to green energy here now, we just start pricing ourselves out of some of this competitive value. I want y'all to know the one thing that Texas has, number one, we have Austin, Texas with, all right, this Aggie's going to say it, and I know you're recording it, so Bradley, I know it'll be out there. You have a great university system, University of Texas. You're the state capital. You're really one of the technology centers of the globe as we speak, and you're surrounded by some of the best natural gas, which is the lowest CO2 emitting fossil fuel in the world. Y'all understand this? I think you're in the catbird seat here at this turning point in our lives. Now, I'm not going to tell you, first of all, I don't believe in man-caused global climate change. I'll tell you why in a minute. I believe we have global climate change, right? So why do I not believe in that? Well, the same people that tell us that man-caused CO2 emissions is causing our climate change will also tell you in the last million years we've had 7 ice ages. We weren't here. Now think about this. We weren't here, but we caused it. That means the glaciers formed, melted, and thawed, and they created again. Y'all understand this? We weren't here. Sounds like we got a cycle out there someplace. Anyone else want to agree with me on this type thing of logic at all? All right. But last January, I was speaking in Miami at a big event, and I was supposed to go to New Orleans, and I couldn't get there because New Orleans was snowed in. Literally, hell just froze over, if you want to think about it from that perspective. My friend was there at the conference. He says, "You're not here?" I said, "Nope, I can't get flights in and out of there." And he said, "Don't worry, we can't get flights out of here either right now." So he went out and took a picture, and in this picture, and I realized that when people are snow skiing down Bourbon Street, we got climate change. Not going to deny that we don't. I asked him, those poor people from Louisiana, how in the heck are they handling this? They couldn't even drive drunk, and now they're on wet, icy roads. And he says, "Don't worry, we got chains out here in New Orleans." Anyone ever been to Malta? During the Roman Empire, they built these tidal baths in Malta. Do you notice they still fill perfectly every day? Tell me about the rising waters and why that's true if these tidal baths are still exactly where they need to be from 3,000 years ago. Did y'all ever think about this stuff? I want you to start questioning your integrity. Now, Sherry and I, all right, we never want to see snow again. Where does a couple from Colorado go where they never want to see snow again? Who's ever been to St. John, the U.S. Virgin Islands? Well, it's right there in front of you. Neat thing about St. John, it's U.S. Literally 67% of St. John's a national U.S. park. It'll never be developed or built on. Great place. But we got this thing called hurricanes there. And you don't want to live through a hurricane. I told my wife I wanted to, and she's finally convinced me we don't after seeing all the damages and stuff. But here's what happened to hurricanes. Do y'all see upward trends in hurricanes here? They keep telling us that we're having more hurricanes. Does anyone see any here? Did you know last year, 2025, not one hurricane hit the United States of America or the U.S. Virgin Islands? Did you know that? Did you know it's the second time 10 years ago? Second time in 10 years that's happened. 10 years ago it happened again too. Tell me about this big climate change stuff. I think we're just realizing it and focusing on it. Now, to tell you that I'm not worried about it, our building is the fourth from the left. Who wants to rent my place? Okay, we'll talk some of the time. Guys, some people say, one of my friends from the state of Washington, from Seattle, said, "You're stupid, you'll be underwater." I said, "Do you think Barack Obama, President Obama, stupid, or Joe Biden?" He says, "No." I said, "They both bought properties on the coast. Did you ever think about that?" Well, that's great property there. What I've learned about Austin. Austin is about an hour away by car from Austin. Is that a good statement? Y'all got the worst. That goat path between here and the north has not improved in 35 years. Am I correct? Yeah. So let's talk about getting there. Let's talk about the business. Airplanes. You fly an airplane, you got to know where you go in the direction. Altitude you need to get there so you don't run into things. The speed and the fuel. Your business is just like this. If you don't plan on where you're going this coming year, that's one of the reasons, Bradley, you guys here at Capstone, you need to know where you're going. And that's what we're going to try to do here. And I'm going to be blunt honest with you. Some of the stuff here I'm going to say to you today, you're not going to like. Great. It is what it is. I'm 71. I really don't care. But I'll tell you the truth. That's the cockpit that Charles Lindbergh flew all the way to Paris. That's it. You realize there's more gas valves in that thing than there is instruments? Just that plumbing at the bottom. Guys, this is the cockpit until about 10 years ago of the typical airplane. That's analog. Here's the latest. Your business is just like this. 25 years ago, you'd open the file cabinet, am I correct? Those of y'all in commercial, or how about on the MLS? We got to wait till the end of the month to see what the new listings are or the shock report, right? And now all of a sudden, you got these glass cockpits with all this data at your fingertips, which ought to lever you in what you do. I've been able to fly a bunch of fun aircraft. This is a Hawker 400, that's me on the right. This is another Hawker 400 flight. Me and a 737. Oh, enough about flying. Someone told me I had to talk about President Trump. I figured this video says it all. Y'all understand President Trump will be president for the next 3 years. What is he going to do? Anything he wants. As long as Congress backs him, and they backed him thus far, am I correct? So you say, well, I can't do anything without Trump. You're just going to miss out one of the coolest opportunities. By the way, I kind of like some of the stuff that Trump does. Not everything by that. But understand that you have opportunities today, even if you don't like the president. Some of y'all love the president. I understand that too. I kind of do. That's just me. I was told this year by people I have to talk about tariffs. Why did we put tariffs on? Well, that was the list of tariffs from a handful of assorted countries before we put tariffs on, and ours are on the bottom. All we did is level the playing field. I don't think we ought to give everyone else a comparative advantage over us. Do you all agree with me on that? I think we ought to take advantage of that. If you want to subsidize someone, go for it. You can, out of your net profit, give any of your money to wherever you want. Go for it, but not mine. That's fair enough. Federal debt bothers me. I told you we have $36 trillion coming due in the next 36 months, but this is what bothers me more. If federal debt was a good investment, then let's ramp it up. This is a study done by Bank of America, a pretty renowned reputational firm. They said, what is the economic impact the last 5 years of our borrowing on GDP, gross domestic product, how much goods and services we produce? And they said, for the last 5 years, every dollar we borrow will only ever earn 58 cents. Do you guys realize that every dollar you're producing, you're throwing away 42 cents with federal borrowing? It's kind of like, I'll borrow my way out of debt. You really can't do that when you're not getting a dollar return on a dollar borrowed. Here's why it's so important, Austin, Texas, that we have manufacturing. Oh, and what I like about Austin, Texas, this speech is completely different than if I talked to Houston. If I was talking to Houston, we'd be talking about drilling rigs and drill pipe. And here we're talking about high value add manufacturing. Am I correct? Your speech is so different than any other speech I will give in Texas now or in the past, even forever. National Association of Manufacturers said a dollar spent in the U.S. on manufacturing creates $2.64 of economic activity. So I'm getting 2.64 times my investment. I like that. That's Austin, Texas. Whether it's chip plant, anything else like that. $1 spent in U.S. auto manufacturing, this is why it's so important we build cars and trucks and tractors in the U.S., generates from $3.45 to $4.23 in economic activity. I want that investment. I think it's critical. Oh, and when President Trump announced the tariffs on foreign-made cars, in Monterrey, Mexico, there is a Honda Passport manufacturing plant. They manufacture all of them shipped to the U.S. And when President said he was going to put a tariff on those for 125%. Within 48 hours, Honda announced they're going to move that plant to Indianapolis this year. Top U-Haul states, Texas, Florida, North Carolina. First of all, other than Washington, do y'all see a group of relatively investment-worthy states? Am I correct? Washington's worrisome because even companies like Boeing say the cost of doing business and the new tariffs and taxes by the localities there is really driving them out of the opportunities. Worst U-Haul states, there's no surprises here. California, Illinois, New Jersey, New York, Massachusetts, just going down the list. Top U-Haul growth markets in 2025, these are young people. In Austin, number 1, Dallas, number 2, Houston, number 3, Austin. Is that pretty cool? I want you to look at number 10. I want you to look at number 10 on that list. Is there anyone in here 10 years ago, if I said one of the top move-in cities in America will be Brownsville or Harlingen in the next 10 years, you'd have called me the stupid Aggie. Am I correct on this one? That's SpaceX. That's pure technology. That's why economic development and investment in your type of business you're doing in Austin, it's the same thing from SpaceX, guys. Top U-Haul growth cities, 8 from Florida, all small towns. 1 from Texas, 1 from South Carolina. We are moving this country to small town America. We're moving to Texas, but we're not moving to Dallas. We're going to Dripping Springs. Y'all follow that logic? Going to Round Rock, going to unique places like that. Guys, we're continuing to move to small town America. When people move into Austin, the MSA, they don't move into downtown Austin. They move in the periphery, in the hubs where people want to live and work at a little less lower cost of doing business. Am I correct? My industrial guys over here will back that up. National Mover Study, top inbound cities. Now, this is United Van Lines, completely different. Why? They're older, they're wealthier, they're very often corporate reloads. I want you to look where United Van Lines is moving. They're moving to small state America. And Bradley and I both said, scratched our heads, we said, Delaware? Yeah, I don't know Bradley Whiting when we moved to Delaware, but there it is. Minnesota, have you been there in the wintertime? No, top logic. Top outbound states, again, no things here. Ooh, Colorado. Now, Sherry and I grew up in Colorado. It's a beautiful place if you like snow and cold. Why are people leaving Colorado? Can I tell you why? If you want to talk about corporations that are leaving there, it's the drug issue. Colorado was one of the first states to totally legalize marijuana. And I'll never forget this about 4 or 5 years ago when one of the top owners of an oil and gas company relocating from Colorado to Texas, when I asked him, I said, why are you moving to Houston? I said, are you going to save a lot of money? He said, no, it's cost us about the same. I said, why are you moving there? He said, because I have 2 young children. I'm not going to raise them in a drug environment. I was driving to give a speech a couple years ago in Colorado, and I was listening to the head of the Colorado State Patrol. He says, do you realize 1 out of 4 times we stop a car in Colorado, they're legally buzzed? Do you want to raise your kids in that? That's kind of intriguing. I mean, you don't mind maybe playing around, but you sure don't want your kids exposed to that. Why people moved in 2025? Why are we moving? 29% closer to family, 26% jobs. That's here. We're going to strive that both. 14% retirement. Top inbound states retirement. Again, Delaware. Bradley, I guess both of them moved back. I don't know what it was, top logic. Wyoming, Carolina, Maine. Wow. That's because maybe you lived in New Jersey and you wanted to get out of there, top logic. Top inbound states, job moves, Texas. We're in the top 10. Improved cost of living, all small towns, all small population states, why we're moving. Top inbound states closer to family. There's not one place I would want to go see a relative in those states. The winter, Sherry, would be just awful. Am I correct out there, guys? Top inbound MSAs with United Van Lines. Y'all see number 6, Brownsville, Harden? And every one of those is small town America. Oh, and I also want to point out how many of those are great college towns. Do you realize what a university does, a major world-class university does to a town like Austin, Texas? Yeah, it does. By the way, very often on these type lists, you see College Station too, and other schools like that. Borrowed money, let's talk interest rates. Who are my residential realtor people? And raise your hands on housing. We'll get the commercial guys in this one in a second. So I'm going to bore you to death for about 60 seconds. I got a PhD in finance with a minor in statistics, which means I can bore the socks off of anyone in this room in 3 seconds. But I model things. And I started back in my dissertation forecasting interest rates. So residential people in here, raise your hands if you think interest rates will change how the residential markets. If rates change, your market will change. So who thinks I'm right? Yeah. So I'm going to forecast interest rates 60 days out, kind of get the trend. That first red arrow on the top left says my model in forecasting rates, if I know what the Fed fund rates is, and I know what the futures market and the 10-year treasury, I can explain 95.7% of all variability in interest rates. Well, you know what that means? That means if I go to Vegas and make 20 bets, I won it 19 times. I lost once. That second red arrow says, is it a good model? And the answer is, yeah, it's a phenomenal model. I'll bore you, that 0.05%, that's 0.15 zeros before we get to percent. It's a great model. And that last one on the bottom says it's a great model. Forget that. Here's the model in case you want it. Oh, and Bradley will make sure, and the great people at Capstone is going to make sure everyone gets a copy of this, okay? All right. Here's how my forecast works. The red line is the actual mortgage rate. The gray bar is my forecast. How does my model work? Yeah. Well, you're not going to like this. My model says, and here's, it is of 3-something this morning, our current mortgage rate, according to Freddie Mac, is 6.16% on housing, 30-year conventional mortgage. Our 10-year treasury this morning is 4.138%. The Fed funds this morning is 3.75%. And if you kind of do all that stuff, it basically says our rate ought to be about 6.5%. We're at 6.16%, which means rates are actually lower than they ought to be right now. But that also, remember, markets perceive changes, so the market sees rates moving down. But how much? And indeed, we're going to have a new Fed chairman. Well, here's what Fannie Mae and the MBA say. And I want you to notice on an annualized basis, we'll do 2026 in, well, 2026, they don't see us getting down to sixes on an annualized basis. Fannie Mae sees us in 2027 get down to 5.9%. Realtors and residential people, I'm trying to tell you is, if you're waiting for rates to go down, they're not going to happen. They're going to trickle down a little bit. You need to tell your prospective buyers, if you want to buy a home, the quicker the better. Who agrees? And if rates go down, you can refinance. Am I correct, lenders? I'm just trying to tell you, people have been waiting for the market to bottom. It did. It's going no place but up, slowly. I'm going to tell you that. And we're going to get there. I'm going to talk to you about inflation visually. That's before inflation. This is after inflation. Everyone got it. Inflation. Our latest rate last 2 months is 2.7%. You can see it on the right. That yellow bar, that's where the Fed wants to go. Guys, we're not there. We're not there. And I know we're going to get a new Fed chairman in May, and I guarantee you they'll cut it 0.25%. Don't expect a lot more than that, because our GDP's hot. We're growing at 4.3%. That's hot. The amazing thing, we're growing at 4.3% without a huge amount of new federal borrowing like we did during the pandemic, which means the Fed's we could hit 5-6% without borrowing a bunch this year, and that would indicate that the economy is overheated and the Fed would raise rates. I don't think even the new Fed chairman's going to cut rates much or quickly. I'm telling you that up front. Great news. Our inflation rate is below our wage growth rate. Yes, we have inflation, but our incomes are going up more. So on an affordability perspective, residential people, your income's going up. It's slow, but it's going up more than inflation. That's good news. And then lastly, let me caution you about praying for new Fed rate cuts. We cut rates in September 2024. What did they do? They went up. We cut rates again in September 2025. They went up. Now we cut rates again and they're trickling down, but they didn't go down anymore because everyone believes, the Wall Street, that we're there. We got inflation. Let's talk about jobs. This is total U.S. jobs. And I want you to look there in April 2020. That's the start of the pandemic. Go back to the trough on the left-hand side in 2010. Guys, from 2010 to 2020, we added, 24 million jobs. We lost 22 million in 60 days during the pandemic. Basically, we almost lost numerically speaking, every job created in the last 10 years. They're all back. We have more jobs than ever before right now. Our job annualized growth rate's 0.4%. Here's Austin. Let me tell you about the resiliency of what I talked to you about before. State capital, a major college town, a global tech center. Guys, go from the trough in 2010 and go to the trough during the Great Recession, during the pandemic. Guys, we didn't even lose a third of all of our jobs. Your economy is so much better. Y'all need to gloat how resilient your economy is, and it takes all those factors to do that. Oh, and the U.S. grew 0.4% in the last 12 months. You grew double that. It's all about jobs. I joke every time I'm in Florida, everyone I know except 3 kinds of people has to have a job to buy a home. You know who the 3 kinds of people are? They have gray hair, no hair, and blue hair. They can buy a home because they're retirees, but everyone else has to have that job. And lastly, I wanted to talk about your intellectual honesty, and this got called out to me. Yeah, but Trump fired the head of the BLS. Well, I want to talk to you about the economics, and I'm not defending President Trump, but I want you to say that if you were in the same position, the head of the Bureau of Labor Statistics is a political appointee, which means if you're the president, you get to hire or fire whoever you want. Y'all understand what I just said? That's the rules. Under President Biden, in the 48 months he was president, the Bureau of Labor Statistics numbers were overstated, but literally all but 4 months. Now, in other words, they were wrong 93.75% of the time. They overstated, they were over-optimistic. Would you fire that person that was wrong 93.7% of the time? Yes. Oh, and the worst one, last June, the first number that came out, they said that the U.S. added 147 jobs in June. The latest restatement says we lost 13,000. I would fire that person in a heartbeat. Everyone agree with me on this? All right. So let me give you some bad news. And what this is if you're employed in what that's called Employment Code NAICS, National Association, and it's basically what you do for a living, 55530. That means you sell real estate, you lease real estate, you manage real estate, you broker real estate, and it could be residential, it could be commercial, it could be even agricultural. And I want you to go that yellow line on the right-hand side. And that green line is the total number of people involved in real estate, like y'all in this room. And I want you to notice the plunge during the pandemic. Now I go to the right. Our housing sales nationwide are down 20%. Our commercial sales are down 40%. And yet we got 140,200 more people in your job, folks. Y'all need to cull your industry, am I correct? How many of y'all think the fewer of y'all in this business right now, the better it would be? In fact, just like residential real estate, we always said the top 20% sell 80% of the homes anyway. Am I correct? Commercial is the same way. Ooh, let me show you Texas, because we're the big faux pas on this one. Your sales in Texas, housing sales are overall are down about 20% since the pandemic. You got 33,200 more people in this job than you had before, which is about 14% more people. So you got 14% more people selling 20% less. Did you hear what I just said? Yeah. Home sales, US. Black line's the one to focus on. It's all about the number of sales. I really don't care about price right now. I want to say, because you don't make a dime, nor does Capstone, nor does anyone else, title insurance business or lending business, if we don't close them. Get this one. 2019 was our last normal year before the pandemic. That red line shows you the number of homes sold in 12 months in 2019. Look where we're selling right now. Guys, we're selling 800,000 fewer homes today than we did in 2019. The US is not back to normal, 2019 being our last normal year. Here's Austin. Oh, and by the way, this morning after I got here, Austin Board of Realtors released the numbers, so that includes the latest numbers. And your 2019 versus where you're at today, I got two factors to show you here. Number one, you're a lot less, and number two, you're heading down. Realtors in this room and residential people, why do you take those overpriced listings? What are you smoking or drinking to do that? We used to have a rule that if you haven't had a bona fide, certifiable, realistic offer in 60 days, you need to do one of three things as an agent, as a listing agent. You needed to go tell them to reduce the asking price, or repair or do the things they needed to do, or give you a 2-year listing so you might get a return on your investment, or let them refer you to another realtor, some other sucker who's going to invest in that property, overpriced property that's never going to sell. But if it does, you'll get a commission anyway. Am I correct? Who likes that strategy? Anybody? We have a lot of sellers who haven't a clue about their values today. Am I correct? Yeah. Here's your month's inventory. And I've heard people, oh, we have too much inventory. Yeah, you got about normal inventory. Austin was so hot that you had way below normal. We used to think 6 months inventory was normal. I think about 4 months is now. You're pretty close to 4 months. I want you to go back to 21 and 22 when you had 12 days inventory. Folks, that was the day if you got a listing, you know in 12 days you're going to get a check. Am I correct? Because it's going to sell. Right? Those days are over. Period. I do want to talk about prices real quick. Oh, and this is the median price as of March in 2020 and every year since then. Only March. Why March? Anything that closed in March of 2020 was contracted before the pandemic. That means it had no impact from the pandemic. Is that a fair statement? Well, I want you to notice this. Between 2020 and 2022, Austin homes went up 57.6%. Is anyone higher than you in that list? No. Your home values went up the most. Between 2022 and 2023, your home values dropped the most. Why? Because you had a bunch of drunk, euphoric people pay too much for houses. Am I correct? Because interest rates were 2.5% to 3.5%. Am I correct? Will that happen again? Not in my lifetime, because we remember it. Oh, and notice between 2020 and 2024, you're up 34.3%. You dropped another 0.7 between 2024 and 2025, which puts me up in the mid 33% range. Did you know that homes in Houston, Texas went up more than yours since before the pandemic? Wow. Who thinks that's a good thing to show some seller who's asking too much money why you need to drop the price? Who is there any realtor in here that's going to use that to negotiate with the seller? Raise your hands if there's anyone that's going to do that. You mean I just wasted all this work for that? Nothing to it. So where are home sales going this year? Well, remember last year we had 4.1 million according to Fannie Mae. We're going to have 4.4 million this year. 6-7-8% up in existing home sales this year. Oh, in 2027, they don't even see us getting back to 5 million. Realtors, I'm trying to tell you, you're going to have a little bit of gain. You're going to have a little more money. I don't see price declines. I'm just trying to tell you, we're getting there. We got headwinds on this one, but we'll get there. Here's what MBA says. They don't see through 2027 getting back to above 4.5 million. I think we're right. Why? It's an affordability issue. And speaking of affordability, what I did in Austin, Texas, and you better appreciate this, it's a couple hours worth of work. The mortgage rate, 30-year average national mortgage rate for each of those months are in the first two columns. The median prices are in the next column. By the way, in 2025, that December was 435,000, so it's 10,000 less. 2024 and 2025, the last two columns, except the last columns 5 and 6, those basically show you the monthly principal and interest payment, assuming you put 20% down, borrowed 80%, bought the median price home at the average rate that month. And I want you to know about affordability increase, and this is what you need to show yours, and I already calculated on the bottom right-hand corner, and I'll make sure I put it in before the PDF goes out to Capstone. Guys, in 11 of 12 months, last year, 2025, your monthly cost to buy a home compared to the same month the year prior went down. How many of y'all knew that? Affordability is improving. I don't expect a lot more because I don't think home values will go down much more. Who thinks I'm right? Does anyone think I'm right on this? Just saying that. Guys, in fact, if you bought a home this last November compared to the November before, you saved almost $2,000 per month just in your monthly P&I payment over the year. Wow, big numbers. Commercial people and residential people listen to this too. Who are my commercial people in here? Raise your hands. All right. My first read every day when I'm on the business mode is to read Globe Street. Does anyone in here read Globe Street? Let me tell you, I got a couple hands. And you all agree with me on this one. Globe Street, it's a national publication. It's all via digital. It's free. And it tells me about what's going on in the US and my local markets and around the world about commercial real estate and the economy and housing. And it's free, and by the way, they've never spammed me. They've never sold my email address. And I want you to go to Globestreet, globest.com, and you can even click off which ones you want, what type of properties you're in commercial, what type of news you want. I want you all to try that for at least 60 days and spend about 3-4 minutes in the morning and read it. I guarantee you it's going to make you a smarter individual in your business. Who's going to try it? Who currently reads it and says, I'm correct on this? Anyone else? Look at the hands going up. Is it one of your best reads every day? Yeah, it is. So let's talk Austin apartments. Who's my specialist in Austin apartments? Anyone in here do apartments? Y'all do? I'm sorry about that. Your life sucks. Now let me tell you about opportunities too at the same time. You've got a great opportunity in front of you. This happens to be MSCI, used to be all called Real Capital Analytics. Look at that red line. That's our apartment sales in Austin during the pandemic. The year before the pandemic, 2019. Look at our sales now. Do you realize from the last normal year you had before the pandemic, if you were in apartments, your revenues dropped 50%. That's why I said it sucks. On the other hand, I think we're going to see some foreclosures. I think we're going to see some buying opportunities. I think we're going to see some highly motivated sellers. And it's going to be a great time to buy. Any apartment people agree with me on this? Look at the hands going up over here, guys, and over here. Guys, apartments, and I'll show you why in a minute. Well, here's the minute. What I did, and I'll just use this one because it's a little bit bigger print. And you better love this graph because it's a lot of numbers. From 1991 through 2024, and I did in 2025 what we could, I said, how many single-family permits have we issued in Austin? How many multifamily permits? I don't care if it's condos or apartments or anything in between. How many total dwelling new units do we have? How many new jobs did we have? It's all about jobs. I've always thought you needed 1.2 to 1.5 new jobs per new dwelling unit. That kind of makes sense, doesn't it? There's some one-earner families, there's some multiple-earner households. And what I learned was, you got to be between 1.2 and at least 1.5. If you have more than 1.5 jobs per new dwelling unit, you got a market that's undersupplied. If you have more or less than 1.2 jobs per new dwelling unit, you're building way too much. I want you to look, now the good news, from 91 till 2024, you got almost 1.4 new jobs per new dwelling unit. That's the good news. The bad news, in 2023, you didn't have one new job per new dwelling unit. In 2024, you only had 0.73 new jobs per new dwelling unit. And oh, by the way, in 2025, and we only have data through August because the government shut down and from building permits, we don't even have a half a job per new dwelling unit. We overbuilt too many apartments, correct, apartment people? Yeah, bottom line. And that's the dilemma we have with buyers of housing, particularly our entry-level people. They can go rent a really nice apartment in a great location, brand new, for a competitive fee because, well, Sherry and I were noticing, Sherry pointed out to me on the way here today, they give a month free right over here, within 3 miles of here on apartments. A month free rent. And I'll tell you something. So now I want to talk to my commercial people. Who's ever heard in a commercial of Glenn Muller? Glenn Muller, anybody out here? Glenn Muller? Glenn is a professor, but whoa, don't get him on this. His PhD was real estate cycles. Glenn Muller works for REITs, and he tells them what to buy where, what to sell where in 6 different property types, over $14 billion worth of real estate. And he is paid on his returns, not just being an academic. So Glenn delivers. Glenn's dissertation back in the 90s was, we get commercial cycles, and he's correct. We overbuild, we underbuild, rates go up, rents go up, rents go down. And he said there's 4 phases in rent growth. Number 1, your recovery. Rents are going up, but they're not going up even the rate of inflation. Number 2, expansion. And you want to be in phase 2, that top left corner. What that is rents are going up faster than inflation and costs are going up, and you're making money. And the ideal place is that number 11 on the top. That's where you get the highest rent and the best occupancy you can get. That's nirvana. You want to be in that phase 2 upper left-hand corner. Right 3 is when we overbuilt a little bit, but it's still okay to buy, still okay to do that stuff. And then number 4 at the bottom is that rents are going down and it's over. Top logic. Here's his forecast for the 4th quarter of last year. And it's the neatest thing, I'm going to compare 54 cities and apartments to you right now. If you have an investor come in from out of town, and you can show them that it's better to buy in Austin because we're cheaper than anyone else, except Nashville, because they're just as messed up as we are on apartments. Notice, you don't want to be in 1 and 4. In 1 is Austin and Nashville. There's only so many of them at 11 you can see in the middle and on the right-hand side. Well, what it says to me, great buying opportunities. If I'm going to buy something, I'm going to be really aggressive in my bid downwards, not upwards. And I'm going to buy at a high cap rate. Apartment people, you agree with me? But I'm going to have some people who are going to finally see the daylight and they can't keep it. And they're going to say, yes, am I correct? Got nods over here. So then I said, okay, how are we doing in Austin on apartment sales? Again, this is the latest data. Full data from 2025 from MSCI, formerly Real Capital Analytics. Guys, your transactions last year were down 14.2%. Dallas is up 4.5%. Houston was down 1.4%. San Antonio was up 8.2%. You know why? Because they sobered up on selling and buying. Who are my office people? Raise your hands. You can cry publicly, it's okay. I mean, there's no. Here's one of my ex posts, and this is February 2025, about a year ago. The Ameriprise Financial Center in Minneapolis, which is an office building, which is sold for $200 million in 2016, was then assessed for $90 million, sold for $6.25 million cash. Does that make you pucker a little bit? What a buying opportunity. What I learned was the land costs were worth $20 million. It was going to take about $6 million to tear down that building. I could net profit $14 million. Take away my 6, I could get 100% return on my money in 12 months. Do y'all understand the opportunity? Do you get this? The number of billions of dollars going to be made by people buying stuff cheap and remodeling it, repainting it, repositioning it, destroying it, whatever you want. Who thinks I'm right? I see in the next 10 years a couple billionaires coming out of real estate just in figuring out what the heck to do with these properties. Portland, again, this is a year earlier, about the same month. Amazing about February. You know why it's February? Because the bank examiners go tell the lenders it's time after the end of the year. This is one of the top 3 to 5 properties, office parks in Portland, Oregon. Sold for $255 million in 2019. It sold for $37.7 million. Do y'all understand that? $52 a square foot, plunging 85% in value. Well, you know what? Those are pretty small footprints. That would make a residential conversion very attractive in a town that doesn't have enough housing. Am I correct? Why didn't someone do that? Someone did, actually. They're going to do that. Office market forecast. Now, let me give you good news. Office people, y'all suck like a bunch of other markets suck. You're not the worst two, okay? See over on the left-hand side, and you don't want to be on that number 1, look at all the company you have there. Company gives you, Sorrel gives you company perhaps. And where is it good? Norfolk, Honolulu, Las Vegas. Wow, how about that? Why Las Vegas? Because people are bailing out of California to get out of there. Let me show you what Glenn figured out. What do these stages mean? And what he did in 2024, he said, okay, let's look at what phase you're in. What did your rents do the next year? Notice at 1, on that number 1, where you're at, rents went down 9%. Office people, do you expect rents to go down, office rents to go down 9% in the newly cut leases this coming year? Yes or no? Someone say yes or no. I heard a yes over here from a neat lady. Guys, we're not honest enough to mention that stuff. But notice what the rents do, how focusing on rents is so realistic. Here's our office sales. Ooh. Remember the blue is 2019, that top, that red line going across there. Where are we at? We're getting about 40%, which means I picked on you apartment people. For every $100 you made in 2019, you now get 50. For you office people, you get 40. You want to double down on this, anyone? Oh, but there's been money made in offices. Here's my office sales, and that burnt orange line, godforsaken burnt orange line. I have to admit this. As an Aggie, I root for the University of Texas to win every game except one every year. And doggone it, A&M didn't win that game this year. What can I say? Congrats on that. But look at what our prices do. I'm surprised prices haven't deteriorated more. Do y'all kind of agree with me on this? That are selling. Now let me talk to you about this. I picked Houston. This was the BP ConocoPhillips tower in the energy corridor on the west side of the loop, of the outside, like Beltway 8. And they just converted it, spent $93 million converting it to corporate residences for all the rest of the properties there and high-end apartments. I want to challenge y'all. Now, this tower is conducive to that conversion. Not all of them are. Next time you're in Houston, I want you to go, and it's real simple. Guess what they named the building? The Watt. Energy, right? The electrical energy, because it's so important. Who's going to go see this thing and take a tour? At least go online and take a look at it. Nobody's going to do that. Okay, well, fair enough. Industrial market. Now, I'm going to pick on industrial, but wait for the end, because there's great news. Phase 4 recession. You guys see a trend here? Also in the bottom right-hand corner. You're not at the very bottom. Good news is you're one step off the very bottom. We have a lot of industrial, but not all of it's the new stuff we need, right? Look at the blobs over here. We changed the kind of product we need we changed the type of high-tech manufacturing that was done in Austin, Texas. And the new stuff is priceless, and the old stuff is low ceiling heights, no docks. We don't care. Am I correct? We just don't care. Worst news is overall in a general industrial market, but remember we have multiple types of industrial, Austin is just as bad as San Francisco. That is curing itself as we get conversion on those other properties. Now here's what I want to point out to y'all. Here's industrial sales. And I kind of picked the average of 2019, that type thing, rolling 4 quarters. I could have gone all the way up. Y'all are at least 50% on that. That's good news on industrial. But here's the gotcha. I want you to look at the orange line and the trend. My industrial real estate of all types is going up on median price. And the good stuff, that quarterly stuff on that high end, we're seeing some really big prices. The problem with industrial is if you have that good stuff, that future stuff that we want today, nobody wants to sell it, am I correct? Nobody wants to sell it. Wow, industrial spot. I read this morning, of course you would have too if you read Globe Street and some of the others. Did you know Amazon is getting ready to develop its first big box property? Who knows this in here? Who are my retail people? You knew that. That's kind of cool, isn't it? By the way, it's in Illinois. God only knows why they would open up in Illinois. I would tell Amazon, Austin, Texas is it. Who thinks I'm right on this one? It is going to be a 35-acre site, 229,000 square foot retail building. It's going to have groceries, General Merck, limited warehouse. It's going to have multiple commercial outlets on site. It's going to have 6 acres of open spaced, landscaped, and stormwater retention. I want to see that. I want to build it. I want to own it. Does anyone else want to do that too? I do. Nobody? Let me tell you why retail is so hot. Oh, and if you're, who is in retail in Austin, raise your hands. These people are happy today because, look, 11 is the perfect number on retail, which is where you're at. Why? You got more people working than any time in history, making more money than they ever made before, and it's all coming through retail. Had a professor at Texas A&M that always said, if you get a raise, you just broke at a higher level. Right? We buy stuff. Austin retail sales, our retail sales are just turned greater than they were in 2019. In other words, 2019, the last normal year you had, we just saw retail sales in the latest quarter go above the 2019 rate. Y'all get what I said? Opportunities. And then if you want to do hotels, by the way, in Austin you're at 7, which is pretty good, and you're on the upward trend. Let me tell you about Austin on hotels. You don't have enough good ones. Because when I was staying here, Sherry and I last night, we drove over from the ranch in Fredericksburg. Most of the hotels where I wanted to stay in the Arboretum area were full. And we finally stayed at the Doubletree. And I'm going to tell you this, never stay at the Doubletree in the Arboretum. I'm not kidding you. I can't make this up. You know, the chocolate chip cookie you get at check-in didn't have any chocolate in it. The chef had made them with peanut butter chips. And I'm not kidding that. You can call them up and ask them about that. Hotel property sales volume. Guys, 2019, we're there already, and we were a lot higher than that the last 4 quarters before that. Hotel property sales, the only thing we're seeing selling except for an occasional high-end, really quality property, we're seeing a lot of our lower-end hotels being sold for land value, but it's a hotel sale, right? Because it's classified as that. And as a result, we're seeing a lot of redevelopment and what have you. So before we get to questions and answers, let's talk about creativity. Who is on board with me that hundreds of millions and billions will be made on what to do with some of this real estate? Everyone with me on this one? Whether it's housing, how to afford, price it, and everything else. One of my friends sent me this, and he says, go to O'ReillyAuto.com and search on there for part 121G. Has anyone ever done this? So I did it. Because O'Reilly.com, I looked it up first because I didn't want to go to a false website and get all that. Does anyone guess what's in this website? What that part number is? And why would O'Reilly put it on their website? If you type in that part number, you get the flux capacitor, which doesn't exist, right? But how many millions of people went to O'ReillyAuto.com and looked up the flux capacitor? Oh, and look at the write-up. Time travel at your own risk. Plutonium is used on board. Plutonium not available in O'Reilly Auto Parts. Yeah, I agree with that. Guys, y'all have websites. What are you doing to drive people there? I don't know if it's fun things like this or data that's there every day, or you post the latest thing from Globe Street you find interesting. Do y'all get this yet? Because we're digital completely. And if you're not, you're flying that Lindbergh airplane, you'll get there maybe. Odds are not nearly as fast, not nearly as cool, not nearly as safe. Lindbergh. I love this lady, West Texas agent, real estate agent. Before the election and president, she says, leaving the country if Trump is elected president, give me a call and let's get your home sold. All right. Did she sell some homes? Yes. Yeah. How about that? Do y'all understand? There's ways to get there, but you're going to have to be creative. I love this one. A couple of years ago, I had a millennial come up to me, and a Gen X and a couple others, and they said, you know what's wrong with your generation? First of all, your assumptions are all wrong. I said, really? They said, you're old, and besides, your generation never invented anything. And I'm thinking, so I said, you know, we did the hand calculator, we did the computers, personal computers, we did laptops. We think about all the things we invented. And I said to this guy, I said, what did your generation invent? He said, the emoji. So I had a speech the next day, and I realized they didn't invent the emoji. The Egyptians did 4,000 years ago. Am I correct? Creativity. What is, oh, if you know, don't say it. But you wonder, what is this? Who doesn't know what it is and wants to call out what they think it is? Call it out.
Apartment complex in Indianapolis, Indiana.
I said if you don't know, if you know what it is, yes, it is an apartment project in Indianapolis, Indiana. This guy owned this ballpark, and he wanted to develop it. And the planning and zoning said, no, you can't change it from open space. So what he did is he built lofts inside the arena. He went in the parking lot and built apartments and parking, and he just converted a piece of real estate that had zero value worth millions of dollars. Who thinks that's creative? Yeah. Guys, he just made millions of dollars just on creativity and doing things. When you go to New York, I want you to go see the Louis Vuitton building. It's not even a real exterior, it's a wrap. It doesn't cost, it wasn't big cost. It's one of those cloth wraps like road signs and stuff like that. And what they learned was it's now one of the most photographed buildings in all of New York City, which makes it one of the most photographed buildings in the world. Because it's wrapped, because of creativity. Buc-ee's. Oh, by the way, my first speech this year was to a group from New York and New Jersey, but it was in Miami. And not one person knew what a Buc-ee's was. Okay, there's 550 people there. And I said, Buc-ee's. And he says, what is it? I said, it's a convenience store. He says, we got those. I said, all right, let me describe Buc-ee's. If you're gonna go buy a beer in New York or New Jersey, that's you on the right with one. If you're gonna buy a beer at Buc-ee's, it's the guy in the middle carrying the beer. Am I correct? It's kind of thinking a different scale. Buc-ee's, world's largest convenience center in Luling, Texas, 75,000 plus square feet. Wow, 128 pumps. Oh, and remember that 30% of the sales of a typical convenience store are gasoline, and the profit margin is double to triple on your goods inside the store. And they're selling the gasoline, and they're selling everything inside the store. Get this one. This is on their pumps. A food service manager can make $150,000 to $200,000 a year at Buc-ee's. I think it's brilliant. They're selling they're selling gasoline. If you zoom in there, it's like $2.17 a gallon on that day. But here's what they're selling. Almost everything in their store except private label things like Coca-Cola and what have you are all Buc-ee's. All manufactured just for them, all higher margin because of that. And retailers, I want you to think about this one because someone was brilliant. They just opened locations on the Texas A&M University campus, no gas pumps, to sell the Aggies all the foodstuffs and novelty items from Texas to Aggies. You really realize what they just did for a lifetime of changing the way people use that. Crate and Barrel used to go to every college town in America just to get young students realizing they need to go there in the future. Retailers, who thinks that's brilliant? Is there a Buc-ee's on UT's campus yet? Why not? Why not? Oh, not only will they sell you barbecue, they'll sell you the rub. This stuff, watch this kid shoot this. He's so good, he knows it's there. I'm telling you, there's millions of dollars to be made in the next few years. Oh, and creativity doesn't end at big stuff. Louis Vuitton, garbage cans, I'm there. Top Logic, one off. So here you are, y'all in the real estate in this room. I think on the housing side, you need to educate your sellers that they're unrealistic about their prices. Number one. Number two, if you got a listing that hadn't sold in 6 months and you don't see anything happening to sell it in the next 6 months, what are you doing? You're getting a seller that's getting angry at you or already is. Am I correct? Oh, and if you're in apartments, I think it's time to say, hey, we know we have some distressed operations here, but at this cap rate they work. Am I correct, commercial people? I think it's time to do that. Oh, and these office buildings, I think we're going to see more creativity. Now, CBRE did do a big study in 2019 before the pandemic, and they said a little less than 20% of all office buildings are convertible to residential because of plate sizes and floor sizes and windows, all that kind of stuff. But what we're seeing is we're seeing a lot of self-storage go up in office buildings, right? We're seeing a laboratory space in Boston that became, the office building became laboratory space. But think about this. Remember, fly analog, get your computer skills on, do the digital stuff. And when you do it, you got one deal, and everyone says amen on this. When you close your deal, from the creativity I gave you today, you're going to close at Capstone Title. Everyone say amen on that one, please. Thank you all. So, Bradley, do we have a few minutes? Do you want questions and answers?
Anybody wants to stick around and ask questions, please. Fire away.
Questions? Anybody? Yes.
Everything's inside. Are people going to go back to the office?
Are people going to go back to the office? The answer is I don't think so. If you'd read me on X, you would have realized this post I put out a couple years ago. They did a study of people that were away from the office for a couple years since the pandemic. They said, what would you do if you have to go back to the office? Over half of them said, we'll get another job. Y'all, thank you. Oh, we've got another lady here. Go ahead.
You recommended Globe Street for commercial use. What do you recommend for residential?
For residential. For residential, I want you to read Globe Street. There's some things there. I want you to go to NAR.realtor website and click their news every day. And NAR does a bunch of studies. If you're residential, have you downloaded last year's home buyer survey from NAR? It's free if you're a realtor. It'll tell you more about your customers you'd ever imagine. Thank you all very, very much.